Hey everyone, Dalton Grados here with a pre-market newsletter here, starting the new week. So sometimes on the new week we like to do a video if we can, kind of set up what we're looking for this week. So today is August 14th, 2023. And we're going to start off with our economic events for the week just so we know what's coming up. And as I'm making this video, I'm kind of looking at all this stuff for the first time myself, so we can kind of go through it together and see what we're looking at. So nothing really today. Tomorrow we've got CPI. Actually, that's Canada. So this is core retail sales. Retail sales 8:30. Red folder. Not typically a big market moving event though. Um, Canadian CPI could affect our markets sometimes, depending on, sometimes the market gets spooked. If their CPI is high, it could mean that ours could be high. Lately, that's not been the case, though. It's been actually meeting expectations. So, um, I don't really think Tuesday will do anything. Um, got stuff in the middle of the night. Okay, Wednesday, I think there's FOMC day. We have FOMC meeting minutes. So it's not a uh, rate decision day, but it is meeting minutes day. So still a red folder. Basically, when the Fed is just coming out with their meeting minutes, they see how much time in their meetings they spent discussing whatever, and that can affect the markets. But it's not a rate decision. So, yeah, so Wednesday, just kind of treat it as a Fed day. Um, Unemployment on Thursday, that'll be important. And then yeah, not really anything on Friday. This is Europe. So Tuesday and Wednesday are basically our bigger days. More so Wednesday. And this all actually comes out at 8:30 a.m. before the market opens Tuesday. So really, only Wednesday should be kind of the day where you might want to take things easy. Get your money early. See what the market does in the afternoon. All right, now for what matters the most, really, in my opinion, and at least really for us day traders, is the technicals, the price action. So, and take a look at ES weekly chart here. Still in a bullish context for the weekly chart, right? So obviously we're zoomed out here, really all the way down to, the 4420s is where we kind of remain more in a bullish context. Kind of a healthy pullback here if you look on the weekly chart. Now on the NQ, I like to keep in mind the NQ because the NQ drives a lot of the ES. We're a little heavier on the NQ, so keep that in mind. We are actually on the NQ, on the weekly chart, we really need to kind of hold actually right here, basically the 15,000s on the NQ to really, be considered more bullish. If the NQ kind of breaks below these 15,000s, you see these gaps we have below us. So I often talk about in the newsletter, oh, by the way, if you're just watching this on YouTube, you click the link in the description. It's a daily pre-market newsletter I send to your email. I should have said that at the beginning. It's totally free. Now, today's will be this video, but every single day, Monday through Friday, I do a written newsletter that just goes out in written form. So anyway, subscribe to that if you're not already. But so I often talk about in the newsletter these imbalances we have below us. So you can see them here. These are what I'm talking about, these gaps that we have to fill. The NQ is a little bit heavier. If we don't bounce here this week, then we could be treading down to fill some of these gaps. So this would be the big target area, like the 14,650s to 14,750, kind of that range. That would be the first imbalance that we fill. So, and just for fun, let's actually look at the Dow. Now we haven't really typically looked at the Dow. However, I have traded the Dow actually intraday because it tends to move cleaner. Dow looking a little more bullish. That's actually the most bullish. So there's a little bit of divergence between the industrials, kind of a market rotation into industrials, and tech, the NQ NASDAQ is lagging. ES kind of in the middle, right? So we compared the Dow is actually the most bullish, NQ is the most bearish, right? The heaviest, and ES kind of riding in the middle, right? See that there? So as far as upside targets, basically kind of getting back where we were would be our upside target, all the way up to the 4600s, kind of entering this fair value, actually that's not a fair value gap, but kind of entering back into this zone here from, 45, 30s, 40s, all the way up to 4600 would be the upside. Downside targets for ES, again, NQ, look for NQ to drive us down. If the market's going to go down from here, NQ is going to be leading that move, right? Does that make sense? So you're going to look for those these imbalances we just talked about on NQ to fill, and on ES we're going to look for first kind of the 4420s area, and then below that we have this volume or this true gap here. Down all the way down at the 4300s. It's going to take a while to get there. Obviously, this is the weekly chart. Each one of these candles is a week. So we're looking at big data, and then we zoom in, right? So we're not saying this is going to get all the way down here, this week. Certainly not today, tomorrow, probably not this week, but over the course of a couple weeks, if we're going to go down, these are the areas we're going to be targeting. All right, so going into today, I'll just use the ES for my benchmark here, and maybe I'll look at the NQ too. But, usually Monday mornings, we kind of just like to wait and see what happens. The market is kind of in this consolidation. So going into the open today, it's not really clear to me. The market's in balance. So I often talk about in the newsletter, and maybe it helps to clarify here if some of you aren't kind of familiar with the vocabulary, but I talk about, when the market's in balance versus, the market's in a period of excess. So the markets are always moving from excess to balance, right? So this morning, the market's in balance. So that just means it's kind of in this range. It hasn't done anything. It's not opening on a gap up way up here, and it might have to fill that gap coming down. There's no obvious opportunities for this morning's open. So once again, I would say my approach going into today is to let the market play out at the open. Probably wait a half hour before commencing trade after the open, and just kind of see what the market wants to do. We're kind of just in this consolidation. Same with NQ. So we'll go back up to a daily chart on the NQ. Okay, same kind of thing. So there's a consolidation range over in this area on NQ. And we're kind of right at this daily order block. See this order block here? So maybe I draw something to kind of show it. Yeah, kind of that daily order block here is where we're consolidating. So again, 15,000s on the NQ should be a key support area. If we get some real confidence below there, then you know that the NQ is leading the market down. So again, I would expect these lows to hold until they don't, right? That's the way the market works. Everything, these should be secure until they're not, right? But again, we are balancing in range. We had, looks like the European Open at 3 a.m. this morning actually had a good move up. This could be a buy-side liquidity grab from, these areas here. We will see. But it looks like Europe wanted to push it up, at least at the open. So again, going into today, the market is in balance. Let's see how the open plays out. And of course, mind this divergence between the YM and the NQ. So ideally, you're going to want to have all of the markets, the YM, the ES, and the NQ, moving in tandem with each other to get your most solid moves, right? But if you're going to short, if the market's looking short, you're going to want to short the NQ because it's leading, right? If the market's looking strong, lately I've been going long actually on the YM, the Dow. And I often in the newsletter just talk about ES and NQ, but you have to look at which one is leading and go with that one for the cleanest moves. So if we're looking bullish, again, the Dow over here is holding up the most out of all three. All right. So hopefully that makes sense. Hopefully that gives you some pointers for today. I know it's set up, again, it's just wait and see, right, for today's intraday. But again, we looked at the weekly charts. We kind of we're seeing where we are for the week. Kind of in a neutral zone right now where it's kind of now or never in terms of the levels that we're at, right? If we're going to remain bullish, we've got to hold these levels. We got a daily order block on the NQ, kind of the same thing on the ES, this order block over here. So we've got to hold these levels if we will continue bullish. What we're looking for this week is, do we hold these levels or not? That will kind of confirm, which way the market wants to go. If I were to have a bias, I would lean bullish because the VIX is still pretty low. And we've been like in a bullish trend lately. But the VIX, and yes, I do have Bollinger Bands on my VIX. We're still kind of, consolidating it down here. So, we'll see what happens. But that's kind of where we're at, right? So, leaning more bullish to neutral bias, right? All right, so I will see you guys tomorrow in your emails, and be marking off these levels on your charts for this week. And if you're not already, subscribe to the newsletter.